Well, welcome everybody. I'm together with the illustrious and effervescent Brent Roberts, who happens to be the #1 sales representative in the Fraser Valley. Has been around. He and I have been around the mulberry bush for a while in the real estate business, and I'm always interested to see, that how many people are now in our business that are really running down the market, or they're scared to death, or they're FOMO, fear of missing out. There's still some of them. But one of the things that I find that the market might be tough, but I started a real estate action group, I guess, in 2002, and then Brian took it over 5 years ago. And what we've seen how people work in all markets. And actually, this kind of market is great for joint ventures. Where
Absolutely.
you may not have as much cash, but maybe you have some time and you have the know-how and the wherewithal, and you can find a good deal. And now you get somebody with the money to put it together. I'm sure you in your life have seen a lot of those.
Well, Ozzy, good to see you, and I appreciate being here with you. Definitely, when people are buying real estate, like they were 2 years ago, the market was crazy. Like you say, you'd fight the next guy to the ground to beat him and pay $100,000 more than you should have, to buy that property, and you think you won. Today you can buy that property for several $100,000 less. And there's some opportunities, and right now a lot of the people aren't buying real estate right now. They're scared, or there's some fear in the marketplace, or uncertainty, with what's going on in the world and things like that. Interest rates are still high, prices are still, but there's motivation in the market right now. You see in some categories only 5% of the market's selling, Ozzy. So,
Yeah.
so that's not good. The condo market's over, supplied right now. And so, there's some joint venture opportunities, some partnership opportunities. Maybe you don't have all the assets. Like, in a normal deal, you need a few things. You need to find a deal, first of all.
Right.
Now,
So important.
you have to have some
Everything
money.
is in the deal. It's got to be a good deal.
It's got to be
After that, everything else is less important.
exactly. Well, as a matter of fact, if you find the great deal, money will flow, right? The money will come to you.
Yeah.
It's hard to get somebody interested in a partnership with you, for example, if you don't find the great deal, because you could have people with lots of money, but they're not going to put money in if they don't find it to be a good deal.
Well,
So,
people always say, Ozzy, can you find me $1 million? And I say, well, what are you going to do with it? I don't know yet, but I will find a good deal. No, the person that has the money may be a doctor or a dentist or anybody that has in today's world has maybe $1 million, and he would love to get more money than he gets in the bank, but he needs to see the deal. Well, why is this a good deal? Well, this duplex on this street, 6 others sold for 200,000 less, and we can buy it for this. I don't have the money, but I can manage it for you. This kind of thing, because usually the partner that has money has no time. And maybe you, as maybe a young couple, or you're just starting out, you do have the time and the wherewithal and the desire and the drive and the managing ability, and it could make a great partnership.
well, absolutely. So there's that. So you've got somebody with money, you've got somebody with expertise or time. The other thing is you need somebody that helps puts the deal together financing. Maybe you've got a deal, but you can't put the deal together because you don't have the ability to qualify for the mortgage, where you've got somebody with a little bit more strength in that respect. You might have the ability to do the management of the property, the operational part of
Right. So important.
yeah. And also sometimes if you're a first time investor, maybe it's a good way to get involved so that you know how to treat your own investments, because some people do things and they don't keep track of it themselves, which is interesting. you know um I've said it before, I've said it many times, sooner or later, even if you've got your own money, sooner or later you run out of $100,000 bills.
Yeah.
you
Yeah.
know
Well, and that's the thing that is so important in a joint venture. If you get together with somebody to do a deal together, that could be very good. But you got to ask them some questions, and they got to ask you some questions. What's your risk tolerance? What can you take? What kind of a joint venture should we have? Should we have a partnership? Should we have a limited partnership? Who's the general partner? And the difference is that the general partner, or a sort of a co-partnership, they're liable for everything that goes on. A limited partner is only limited to the amount of money he puts in. And And maybe it's a co-tenancy arrangement, or are they? The point is, you got to sit down with the other person and say, okay, what about this? What about that? It's relatively easy. Make sure they understand. Get them to get some independent legal advice.
Absolutely.
Well, I trust you. Now, it's not a matter of me. Of course, you can trust me, but you should not just trust. You should trust utterly. And you can trust utterly when you are, where does the money come from? How are we going to put this together? Let's sit down. What percentage of return do you get for putting in your money, and what percentage do I get? Is it 50-50? And if so, is there a management fee? What is to do with the rental income? There's all these questions. You can sit down in a couple of hours and get an answer to the questions and take them all together. And I know people will hate me say that, but then take it all to your lawyer and put it into legalese. Because
Well, but
when
it's
things go
important
down,
to marriage.
yeah, when things go down the road, everybody's going to look for that piece of paper.
Well, you're absolutely right. You've covered quite a few bits right there. First of all, you want to make sure that your joint venture partner, your partner of any kind, has the same goals alignment. Like for example, if they need cash flow every month, and you're not planning on paying out for 3 years, well, you're going to have a disaster in the thing in the partnership. So you need to make sure your goals align. And it depends if you're being what side of the partnership you're on. You don't need to have somebody that if you find that a little bit of things irritate, it's almost like a marriage, isn't it? You find that person says, oh, isn't that cute? Sooner or later, that little cuteness is an irritant, and you want to make sure that you don't, that partner isn't driving you crazy. Oh, look at that. Aren't they involved? They phone you 3 times a day. Well, once you've got their money, do they phone you 9 times a day? You want to make sure, what kind of a partnership do you have? Are they a silent partner, or are they a partner that is a working partner with you? Because maybe you need their partnership. My partnership is I'll find the deal. You'll put in the down payment, but I need you to property manage the property as well. So you need to make sure everybody knows what their roles are. And that's
and what are the rewards? If you're expected to manage it, it still might mean you get a 3 or 4% management fee, because you're probably going to spend all day long. Let's say also it's not just cash. Maybe you have a piece of land, in particular in today's world, maybe you own that lot and maybe you can put a sixplex on it. And I have the money to build the building. Well, now comes the question on, are our wives allowed during construction and then tell us we should change the colors? Or is there one general partner, he makes a decision. We sit down, the 2 of us sit down and discuss everything and say, okay, the money and this is all clear. From now on, you're the general partner, you're in charge of building the darn thing. And this is the timeline. And then what if something goes wrong? What are we going to do? How are we going to bind up the partnership? All of those questions, you got to ask them before you sign on the dotted line.
Well, you're absolutely right. And a lot of people seem to, I've had a lot of people, as you've had millions, come to you and want to partner with you on a deal. And I've had often it's somebody over promising and under delivering. Well, Brent, we've got this and this is what we want and this is what we're going to need. Then you find out that there's cash calls every month and you didn't bank on that. All of a sudden somebody's asking you for money every month and, it's going on for 3 years now. Sooner or later, you lose interest in it, and you could lose part of your investment by not knowing all these things. And it's very important in that respect. How can conflicts be handled if there is a conflict in that respect?
Right. But that's the key also, that let's say you have a piece of property and it does have, something wrong with it. It's a minor thing and you don't talk about it. No, you got to disclose everything, and disclose also the uncertainties. In the example I just mentioned, that we have a piece of land and then we're going to build something. Well, you got to say, look, there has to be a clause saying that if the building costs go up, not our fault, but that's covered. We can't say it is going to cost this much and you're responsible for that. No, there is the possibility that, hey, it's actually gone more or it's taken longer. Look, I've been involved in a number of apartment buildings recently. We just finished one after 2.5 years. Well, it was supposed to close in October. It closed in April. Well, who could COVID and all the things that came? But that's all covered in the documents that people sign when they buy something. You should do that, particularly on your own sense. Okay, what happens if, right? And who
Right.
has the signing authority? And what decisions can a partner make by him or herself? what decisions have to be made together, maybe have a meeting once a month or whatever, right? So the point is, I always joke that sometimes the guy gets the money from the mother, and they have a different kind of a view on the partnership. The guy thinks it's a gift, and the mother still wants to have her money back, right? And so even in a family, get the thing in writing as to what are our objectives. And
Even more so if it's family, you know,
yeah,
because people just think that this is an agreement, and you don't want to break up a family or a marriage or a friendship for that matter. You know, the more you've got detailed, and of course, you know, it's good. Maybe you have 10 points about what the joint venture partnership is going to look
right.
like, and you go over those talking points with your joint venture partner. But then, like you said earlier, Ozzie, you go to a lawyer and you get it penciled, you get it put in writing, and that everybody understands it. They go get their own legal independent advice so that they can review it and make sure that if they do have any questions, that they're covered in that respect. Because it is important, what roles is everybody going to have? And like that partnership that you're talking about, where the land value, how much was the land value? What are they allocating for
Exactly.
that?
Exactly.
You know, I mean,
You don't even, and I've seen partnerships where the partner looking for, say, 6 partners of 100,000 each, and he's rolling in the land at $1 million. But then you got to figure out, when did he buy it? Did he buy it 2 weeks ago at 700 and is making $300,000 rolling it into the partnership? And it sounds like little things, but these are really annoying you down the road when you find out about it. It's fine from if they upfront say, look, I'm picking up $300,000, but it's worth $1 million. The appraisal is $1 million. I just got a great deal, and tell me about it, and then I can decide on whether I still want to be a partner or not. But it's the more disclosed, the better it is. The more you can expect what is going to happen in the downside. What's your propensity to risk? What happens if there's a cash call? Can you actually step up to the plate and add your share? Let's say, what would it be? And you'll find that the more you talk about it, 2 things are going to happen. One is you're going to have a great partnership and it's going to be fine, or you're not going to enter the partnership, which is just as good, because rather than finding that out down the road, it's better to do that before you sign.
Well, and that's so important. Like, you nailed it, because you know, sometimes saying no is the best way to do this, because you know, you might regret, oh, I missed a great opportunity, and then you watch it and you find out. For example, I'll give you an example. So, you know, it's important to figure out, if you're the one giving the money to people, what is their experience with joint ventures? For example, if they've been involved in 10 other partnerships before, maybe you want to get 5 referrals from them, or 10 referrals. You want to talk to everybody they've gone into a joint venture with. You want to look at their social media accounts and all their marketing and everything else. Are they an expert? Like, for example, if they were buying here, you know, they're buying duplexes in Surrey, for example, and all of a sudden they're going to be doing a project in Mexico. What expertise do they have there?
Yeah,
You know,
that's such a good example, because we have it over and over again. You know, like in our action groups, we have hundreds and hundreds of people that were members, and they got excited about it and do go to places like Mexico or go to anywhere else in the world. And I always maintain, look, you know, it's hard enough to find out all the laws and difference between the United States and in Canada, but at least, you know, we have a legal system, we have a banking system we can trust. But we don't know anything about Mexico or Thailand or Portugal, or you have to study it. So if I were to do a partnership with somebody in those areas, I got to be sure that that person really understands what is going on, and most of them don't.
Well, and you know, everybody's an expert, aren't they? You know, for example, you know, they've been able to tie up a property, maybe a 39-unit apartment building or something like that, or you know, or a 20-unit townhouse site, or whatever the case is. They're able to tie this up, and you know, they're so excited, and they've got everybody else's money. Everybody's really optimistic when they're not using any of their own money. You know, it's amazing how this is going to work out. And maybe they've done a deal or 2 or 3 before and it's worked out, but maybe they're just brand new in the business. Tried and true is very important. You know, this is your money. This is your hard-earned money you're taking chances with. You want to make sure, like you always say, if you put it in the bank, you get 105% return. Well, what do you mean, Ozzie? Well, you get your 5% return from the bank and you get 100% of your money back.
Yeah, that it has been in the past. More importantly, right? Even today, I wonder sometimes about the stock market. You know, I want to have my money. It's not the return on my money, it's the return of my money that is important. But
Exactly.
it's true, you know, even if you go to the United States, every state has different rules. We have a tax treaty with Canada and the United States. But it may still be that in Phoenix, that they have a triple LP, which we don't have in Canada. And then you want to have your taxes offset, and the Canadian government says, we don't understand that. It doesn't qualify, right? These are things that if you're going to go out of the country for a joint venture, you really got to sit down and figure out, do you have to declare your world income say in California, which quite a few people are not aware of. Anyways, the point is we don't want to go too far afield. The
Right.
key is joint ventures work. And you know, the thing is, you said earlier, maybe the person doesn't have an experience. That shouldn't put you off either, because if you have the drive and the wherewithal and you've learned something, but you do need a preponderance of proof that you're a good person, or you know, tell them, look, I haven't done this before, but I want to do this, and I've joined the Real Estate Action Group. I have access to all these people who've done this before. I can talk to them and get the information. Here are 10 letters of people that I used to work with. And that's, I always used to say, you know, if you don't have anybody that knows you and you want to be look better, have people that actually like you write it, saying, look, Ozzie is a good guy and such and such. The more the better. People saying, how many letters should I have? Have 100. If I'm going to get money from you and I have 100 people saying, this is really a good guy, you can trust him, it's better than having nobody saying it, right? The whole idea is that we want to make ourselves look good. It's the same. I sometimes think you have a small company. Well, get a local alderman or the local bank manager and have them become a member of your board of advisors. You know,
Right.
you buy them lunch once a month, and you will ask them for advice. But now I have on my stationery, I have, you know, all these fine names, and I've done this all my life. Then you try to look a little bit better. And you are better, because if I do have an alderman and I do have a banker on my stationery, and then I have access to them. But anything, the money is really very interested in working with you, but they got to trust you. And in order to trust, you know, you got to prove that you're competent.
A couple of things that you've said that are very valid there and very important. You know, first of all, if you've gone to those points where you've seen an alderman or somebody, all these people, guess what? I feel better about you because you've done your due diligence. You're doing homework. You're being organized. You know, so you're absolutely right. You and I both have partnered with people that are brand new in the business at doing something, and they've gone and skyrocketed this thing and blown it out of the park. And you and I both received very substantial returns on our money, unbelievable returns on our money that we could never see anywhere else. We've also, you know, I think also if somebody is transparent, I think that's good. For example, you know, Brent, we did this deal recently. I got to tell you, you know, the investors all lost a little bit of money, but here's what we've learned. And guess what? Because of that, we know this one is a grand slam home run. You know, so sometimes their previous experiences, even if they're negative, as long as they're transparent about it and showing you that, hey, look at, you know what, we did try to do this. We, you know, normally we're getting a return of this much money for people. Well, the last one, hey, look at, you know, like my dad used to say to me, I owned 17 properties, I think 18 properties before I became a realtor, and I kept them all. And then I was buying my 19th property and the market was going bad. And I said to my dad, I said, I don't think I'm doing very well with this one. He says, well, Brent, if he bought 19 stocks and one of them wasn't very good, that's a pretty good track record, right? And you know, not everything goes up. And I said to him, yeah, as long as that last one doesn't wipe you out. You know,
well, that is true in the stock market too, isn't it? I mean, that you know, when I look at all the eager beavers in the crypto world, you know, I admire them. But I mean, I tell you, there is, you know, it's funny. I had all these people asking me for NFT, like the tokens. You know, NFT was the thing.
yes,
queries, and it was horseshit. It was absolute horseshit. But they have a painting that this guy created, and this is an NFT, and they sell it for $5 million. And then you have some personalities, some movie stars, and they're supporting this particular picture of an ape that looks like just a drawing of an ape, and it sells for $7 million. Everybody smells. It smells like a there's something not quite right. And in the end, it's all the little guys and the retail investors that got caught in this,
Right.
you know, because so-and-so, the big shot, said so. So in real estate investing, there's no big shot. There's a property. There is a good deal. What are the reasons for the good deal? Well, I've looked at similar properties that have sold for a lot more than we can buy this one. Plus, the owner will carry a 60% mortgage, plus the access, plus what we can do with it. And if we can tie it up for this kind of a price, and we together put the down payment, both of us could benefit. Now that makes sense, right? And nobody expects in real estate to make the money instantly anyways, right? You have a time period. You have to have permits. You have to have, you know, the construction or whatever it is. And so as long as you spell it all out, that everybody understands what the objectives are, and then the rewards will come. There's no doubt in my mind.
Well, and you're right. Like, I mean, you look at these cryptos and stuff like that. Boy, gosh, that's exciting, right? Oh my gosh, this is now 80,000 or 60,000 or it's 40,000. I always say real estate's boring. You want it to be boring. You want to own it for 20 years. I remember buying a stock years ago, and it was supposed to do this magical stuff. And I bought, only $5,000. I was watching BNN every day, first thing in the morning, I'm listening to the radio. I'm getting my assistant to check on the stock 4 times a day. I come home, I watch this thing, I've got $5,000 invested. And then it dawns on me, I've owned 20 pieces of real estate. Some I haven't been in for 3 years, well, and there's hundreds of thousands of dollars invested, and here I'm investing $5,000. Oh my gosh, the amount of stress and the amount of, boring is good. You buy a piece of real estate, you hold on to it for a long period of time. You increase its value if you're buying, that piece of land you're talking about with the 6 units on it. You can make real estate. There's so many different aspects of it. If you're buying I'm sure, what do you call it? The Bitcoin or something like that must be exciting. I mean, oh my gosh, it's down 3%, it's up 10%. That's great, but it's a gamble to me. And, real estate seems to be pretty certain. I joke about it. I think I mentioned it to you before. Even if I buy a property for $800,000, and in 20 years from now, they say the market crashed and it's only worth $600,000, and somebody says, "But Brent, I just lost $200,000," and I said, "Well, hang on. You invested $200,000. You're selling it now that the tenant's been kind enough to pay it off. Right. It's paid off. You're selling $100,000, and now you've got $400,000 more than you started with. What a great part-time job. Boring as anything, but you've owned it for 20 years. And in the meantime, because you've lost $200,000, the government allow you to write it off against your taxes as a loss. Now, in British Columbia, rarely do we ever see that kind of a loss. But
in fact, like 20 years ago, the average house was under 300,000, right? Or 400,000. Right. I wrote my book in 1998. And the average price was 278,000. And my argument was that we live in an inflationary world, the most unreported inflation of all time, and that if we kept on printing money that we did in 1998, by the way, there's an NDP government in power then too. No, not that they had anything to do with the money printing by themselves. They're also overprinted, like all governments do. But the point was that I felt if we keep on doing it, every house in Vancouver was worth $5 million by 1932. Well, the West Side last year was at 4.4 million, and our average price is over 2 million. So no matter what you bought, even if you made a terrible mistake, you did better. But the key is in creating a good joint venture, you don't want to make the mistake going in. You want everybody understand what it's about, who signs the checks, who makes the decisions, and then together we will hopefully all benefit. Now, look, next week, we're going to have an interesting show where we're going to talk about some of the losses that have been incurring, and there have been some deals out there. And remember that we always say somebody's nightingale is another person's owl, right? I mean, this market is a winner for many of the buyers out there. And maybe you don't have the money. Maybe you have the idea of a deal though. And the money will always find you if you have a deal. You said that earlier, and that is so true. A good deal will run your door in with the cash in hand. And I've never seen as much cash in the marketplace wanting to be applied. A lot of the money leaving the stock market. My God, Warren Buffett took $277 billion out of his stocks, and he is the Mr. Keep Your Stock Forever kind of guy. He took and put it into cash. Bezos sold 40% of of Amazon. Some of the biggest forecasters in the big multi-billionaires are selling right now the stock. So I would still be more happy to be in my real estate investment.
Absolutely, Ozzie.
So thanks for coming, and watch us next week, Wednesday afternoon. We'll have another show. This time we're looking at some real losses that people have been taking and how you could benefit as a buyer.
Some real opportunities, Ozzie.